Hello, everyone, and welcome to another episode of the Business Growth Show, where we talk about all components of business and how to utilize them for exponential growth. My name is Athin Cassiotis. I'm a serial entrepreneur, international speaker, business growth strategist, coach, mentor, and consultant. And today I have an awesome guest. He's an award-winning entrepreneur, digital transformation catalyst, keynote speaker, venture and angel investor, marketer, and proud father. He is the managing partner of HappyMarketer, where he has worked with many large brands, and is the managing director, CXM Group Singapore for Dentsu International. He specializes in implementing data-driven digital campaigns for marketing, customer service, and online reputation management. Welcome, Prantik Mazumdar, and thank you for being on my show.
Thank you so much, Athin. Thank you for having me. I love the energy that you bring to this show. It's such a pleasure to have this opportunity to have this conversation with you.
You're welcome, mate. It's so awesome to have you here as well. I'm sure there's going to be huge amounts of value that's going to be shared with everybody today. So you're a very successful entrepreneur. So for those people who don't know who you are, just please introduce yourself by telling us about you and your journey.
Absolutely, Athin. Pleasure. I would, classify myself as an accidental entrepreneur. To be honest, my background is I grew up in India, in Indonesia, two emerging markets, two very large markets. And then for the last 20 years, I've been blessed to be in Singapore. So Singapore is home. I live with my wife, who is a doctor, and a 5.5-year-old son. And my 20-year journey in Singapore, when I landed in this beautiful island of Singapore, which is a utopian island, a pragmatic place for commerce, for business. I studied computer engineering, then I worked for the Singapore government. And that was fascinating to see a government that is so progressive, a government that is meritocratic, which took a foreign student like me and gave me an opportunity to kind of help local businesses internationalize. So my first 4 years was working with local startups and small businesses to help them internationalize, given Singapore obviously is a very small market. And then I jumped ship on the private sector side. I wanted to get some experience selling and marketing. I joined a brand consulting firm, a B2B brand consulting firm, helped them launch their services in India. But to be honest, it was an absolute roadmap of failure. It was a great lesson for me to understand why businesses fail. And unfortunately, or fortunately, it happened at a very early stage in my career. So I picked some lessons and I then moved back to Singapore with an Indian digital marketing services firm, which is doing very well. So I headed their APAC sales team, small team, selling by day, delivering by night, got my hands dirty, got used to the whole sales process in the digital world, which was phenomenal. And this is just a time around when the likes of Google, Facebook, Salesforce was setting their regional hubs in Singapore. So timing was great. And then my paths crossed, and that's where the accidental entrepreneur comes in. My paths crossed in with one of my very good buddies from university, Rachit Dayal, who's the original founder of HappyMarketer. And he said, buddy, you're doing this in digital. Why don't we join hands and do something together? So that's when we kind of came together. HappyMarketer was born in its new shape and form. And long story short, we had a lovely 10-year journey where we had a implementation arm, a consulting and a training arm. And we went around places, in Singapore, in Southeast Asia, in Australia, in Europe, in the US, and we managed to scale a services business from $0 to $10 million. And again, the beauty is because it's services, there was no question of venture funding or any sort of debt. What we also learned very humbly is one of the best ways of growing a business is through customer revenue, best sources of funding. And we ran that, and the plan was to kind of keep running it, growing the next layer, taking it to another, the different level. And but as things would happen around 2018, we received a acquisition offer from the Dentsu International Group, specifically Merkle, which is the largest brand within Dentsu. In fact, Merkle has a pretty strong presence in Australia, in Sydney. And they reached out because they wanted presence in Southeast Asia. And so the deal took a long while. It took about a year plus, but finally we closed the deal in Feb 2019. And we became part of the Dentsu International Group. And today I manage the Singapore P&L for the CXM service line within Dentsu International. That's my day job. That's my accidental entrepreneur journey. Very fruitful. Have had the opportunity of servicing clients, speaking, writing, just meeting interesting people and helping many businesses transform digitally. And outside of that, over the last 3 to 4 years, I've been fairly active in the investment space or the advisory space with early stage businesses, be it fintech, edtech, health tech, B2B SaaS, or even the sustainability space in Southeast Asia, India, which is where most of my network is. And that's very heartening. That's very, I don't know about the returns, but beyond the monetary returns, it's just the ability to connect and work with founders, which kind of makes your day worthwhile. So yeah, that's a little bit about me, my background, and my 20-year professional journey.
Awesome, mate. What a journey. And I love the accidental entrepreneur thing where you're like, hey, met your friend from uni and born the new HappyMarketer, and then how everything's flown from there. You've been very successful. So that's awesome. And I love to get into a few of these different topics now. And I guess just firstly, you got a lot of experience in the digital marketing world. Of course, you've been doing this for so long, over 20 years and over 10 in HappyMarketer. What are you seeing now these days? Because the marketing changes, right? Like there's a lot of testing, there's a lot of things that are happening, and it changes over time, especially we've had COVID now, we're getting out of COVID. So the market's changing a little bit. So what are you seeing as some of the biggest opportunities, in the current market?
Yeah, since the time I grew up, so when I was growing up in India, Indonesia, Singapore, my educational formative years, there's a whole concept of mass communications. If you looked at just university degrees, every university had a course on fundamentals of marketing and mass communication. In the last 10, 15 years, with the emergence of technology, social media, mobile, what's fundamentally shifted is mass communication has moved towards personalized marketing. So instead of broadcasting on television, radio, which is still important, mind you, I think where things are shifting is businesses and marketing functions, they want to target specific niches. They want to offer personalized products, personalized messaging, personalized offers. Because the whole notion is, if I know Athin well, if I know your habits and behaviors and your preferences, I can offer you something personalized. And the probability of you converting to a customer or a loyal customer is much higher. So that's the one fundamental shift. The other is, again, what helps this, a key driver in this movement towards personalization or personalized marketing is the leverage that technology brings in. Our marketing now has become a confluence of art and science. It's no more about just the creative. Creative is very important. The narrative, the story is important. But the question is, how can you leverage technology to personalize the narrative at scale? You could have the same insurance product, life insurance, but if you're selling life insurance to a 25-year-old versus a 45-year-old, you could have a very different narrative. And the narrative gets further personalized, not just based on demography, but whether you're living in Sydney or Melbourne, your context is different. So technology allows you to not just scale, but scale given the context of the customer, right? That's the second big difference. The third is things are relatively more measurable. The whole science of attribution and measurement, I think, is a big game changer because previously, marketing was very much about spray and pray. You show an ad of a soap and you don't know whether someone bought the soap because they saw the ad or not. Today, with attribution science, you can make a pretty good educated guess, if not a very accurate prediction that, Athin bought the soap because he saw this particular ad on Facebook or Instagram. So that's the third leg, measurability and attribution. And the last thing, which, with all of this, what's happening is, if you look at a lot of businesses like the Netflixes and the Unilevers, they're driving this. They're actually moving away from pure play chief marketing officer roles. What you're seeing is chief CX, customer experience, chief business, or chief revenue officer, or chief digital officer, where irrespective of the title matters little, but what's happening is these functions are basically looking at the entire customer experience. It's not just about marketing a campaign or a message, but it's about the whole life cycle that, hey, am I understanding the customer? Am I, unearthing insights? Am I then shaping my campaigns? Am I then tracking sales? So the KPIs for this particular group or this particular function is no more about how many people saw my ad, but really about, have I touched a customer across different touch points and are they eventually buying? So I think even the KPIs are shifting and hence the org dynamic. So I think with technology, to sum it up, it's personalization at scale and not mass communication. It's the science of marketing. It's the measurability and attribution, and hence the overall org dynamics and the KPIs and the expectations from marketing are, I wouldn't say are, but have fundamentally shifted already.
Yeah, awesome, mate. Love that. Really powerful. And thank you for explaining it in detail, but also summarizing it in how everything is changing. And, the entrepreneurial journey is challenging, and yours, you went from 0 to 10 million in revenues, to acquisition, which is awesome. Not a lot of businesses, get to that point over 10 years. So do you want to tell us a little bit about that journey and what lessons you learned from, getting to where you are now?
Absolutely. And this is the beauty of hindsight, I suppose. When we started, we were just two young kids from university with computer science degrees, and to be honest, none of us are marketing trained. None of us understand the creative process of marketing. But I think we were there at the right time. So timing clearly matters. There's a huge role that timing and luck plays. So we realized in hindsight that the fact that we were not marketers or marketing trained was a boon, because our minds were shaped differently. We were allowed to kind of experiment and bring in the data science element into marketing. So I think one of the lessons is always to kind of, as much as possible, to try and bring a fresh perspective to an existing problem. I think sometimes being formally trained or educated in a particular domain just kind of puts certain lids or certain covers which can kind of blind you. So I think one lesson always has been is, how do I get a fresh perspective? And I think one way to do that is to have a diverse mix of people. And that brings me to the second point, is that we made it a conscious choice that we will hire not just marketers, but economists, people from social sciences, people from engineering, people with mathematics background. Because I think the moment you have a diverse perspective on a problem, you just get a different a flavor, a different potential solutions, which was beautiful. And in fact, internally, in hindsight, we call ourselves the marketing misfits, because none of us are traditional marketing trained, and I think that's a boon. The second is on the power of partnerships. This again, as we were growing, we realized that a lot of our growth came due to partnerships with giants such as Google, Salesforce, the Boston Consulting Group, HubSpot, because these guys were great product companies or consulting firms, and their reputation preceded them. But once we were able to prove our value, our domain knowledge to these partners, and we figured there was a model where we could resell or we could consult or on the top of their products, and they trusted us, we realized we suddenly had a flywheel, because these guys had a reputation, they could refer deals, which meant suddenly we didn't have to invest or spend a lot on our own sales and marketing. When these guys brought in leads, our win rates were much higher. So I genuinely believe in the model of partnership, that if there is, if the partnership is kind of, if there's complementarity, if there is trust, I think partnerships can be a massive contributor to a flywheel, right? That's the second learning. The third is, I think, in terms of people and culture. And if someone was to ask me what's the secret sauce, there are 200 digital marketing consulting firms in Singapore alone. If I look at Australia, if I look at India, China, there are probably thousands of others. The secret sauce is the one that's hard to define and hence hard to copy, is the cultural element of the people. So we internally called ourselves the Happy Tribe. And one of the things that we kind of instilled in our people is, when you work at our firm, be selfish, do it for yourself, do it to kind of advance your career. Because we always believe that if an individual is happy, if he or she is happy with the work environment, it will show in the work that they deliver for the clients, and which would automatically mean clients will be happy, which would mean, business will flow in. So we said, let's focus on the variables in our control, which is our people, which is our culture, which is the way we lead our daily lives. Let's not worry about the revenue and the revenue growth, which are obviously the important end results, but not everything is in our control. So let's really focus on the variables in our control. And I think what we really pride ourselves in is the cultural aspects. Are we hiring the right people? Are we creating the right sort of environment? And so I think we were very clear that we have to be happy as individuals. We have to be at peace, which meant we ensured our people have a lot of flexibility. We ensured that our people could use HappyMarket as a launchpad to further their careers. And in fact, we always told people during our onboarding that, guys, I never liked the analogy that work people are family, because let's be honest, at the end of the day, we all have our real families. Work is and if it was true that we were family, then we would not pay each other money, because families don't transact. Families don't fire or leave each other. So we like the analogy of a sports team, that, hey guys, we're here together in a team. We want to win. We want to play to win. We want to have fun. And guess what? In 2 to 3 years, hopefully you'll find a new team, right? A new sport, right? So we, in fact, prepared people that, hey guys, once you joined us, think of it as a 3 to 5 year, if it's a successful relationship, think of it as a 3 to 5 year launch pad. Hopefully you will move on to a better place than HappyMarketer. And we're very happy to see people have joined the McKinseys, people have joined some unicorns, and they've become proud alumni. Some of them have become customers. They become your advocates. So that's the other third part, is culture. Create a culture which makes your current day happy. You can't really focus too much on the future. Focus on the now, on your current day. So, those are 3 elements of people, culture, your partnerships, and of course, acknowledging the fact that timing and luck plays a role. And one of the ways to make the most of it is to just have a diverse skill set or diverse environment.
Yeah. Awesome, mate. Love that. Really powerful areas there. Thank you for sharing. So you're big on investments. I want to get into the investment side of things now with you. So you're an early stage venture investor across India and Southeast Asia. Initially, do you want to maybe just tell us about why you like to invest in, what it is and why you do it? Yeah.
It all started post my exit, when I had some capital, when I had some free time. The journey started with, not from a monetary perspective, because truth be spoken, one can make money on the public markets. But the real genesis of this, or the whole crux of this, was in terms of a question that I ask myself often is, what next? I've built this venture, I've sold this, and I'm part of a large company. What's the next big thing that I want to spend my time and life with? And one of the things that came to my mind is, what I always love doing is this whole 0 to 1 journey. And so I said, whilst I'm in the big company environment, maybe I could spend some time over the weekends, in the evenings, spending time helping new founders. So, and the 2 ways that I've kind of structured that is, or 3 ways rather, is working with early stage founders as an early stage investor. But it's not the money, but what I also enjoy doing is spending time advising, mentoring some of these founders who may need that help, or who may value my time, on various aspects, be it our culture, be it fundraising, be it product development, be it scaling up their business. So there are 4 or 5 areas where I think I'm passionate and I might have some experience which may be of value. So it's spending time and putting in money. That's one. The other is, I do work with some larger VCs in the region to help their portfolio companies who may be at a slightly higher scale of growth. And I also do spend some time with my university alma maters at NUS and INSEAD. And there's an organization called TIE, which is an entrepreneur network, again, to give back, right? That's a pro bono. So again, for me, the whole genesis of this activity is about, how can I vicariously live the founder life? How can I work with some of these folks to kind of figure out some of the challenges, figure out, can I be of help? And, nothing gives me more joy than to kind of work with some of these founders to help them remove some roadblocks, or sometimes just look at things from a different perspective, and sometimes just to be a sounding board, right? Because the founder journey, as you rightly said, the entrepreneur journey is lonely and it's hard. And sometimes just lending your shoulders, lending your ears could be a big help. So yeah, that's how it started, and it's been 3+ years, and it's been fabulous just to have the opportunity to see pitch decks, to listen to their stories, to potentially help them out at some point in time. It's very gratifying.
Yeah, awesome, mate. Love that. Really powerful. And yeah, I know with my coaching and mentoring, I like to give back to founders and businesses as well. So it's very, very rewarding. Love it. And I know specifically you've invested in like healthcare and education and employability startups, that empower the region's like 2 billion people, which is really powerful. So yeah, what made you sort of get into those spaces and the differences that you're, making there as well?
A fabulous question. And I think there are 2 driving forces there, Athin. So one is the market, right? So I've grown up in India and Indonesia and Singapore. So Southeast Asia and South Asia are 2 markets that are close to my heart. And these are burgeoning economies, these are emerging economies with lots of challenges, but plenty of opportunity. And I dare say, if I look at where the venture capital money is flowing, in APAC, outside of China, which is a completely different story, there's massive amounts of opportunity and capital flowing into South Asia, which includes the whole Indian subcontinent, and also Southeast Asia. And so to me, one aspect of this was, is the opportunity large enough? The answer was a resounding yes. Just in terms of, Southeast Asia, people don't realize is about a block of 10 countries with nearly 600 million people, with a massive burgeoning middle class, with Singapore, Indonesia, Vietnam, Philippines. That's where bulk of the activity today happens. India is a completely different story, massive amounts of opportunity, massive growth in fintech, logistics, in edtech, etc. So the opportunity size, the emerging market story in these two economic blocks is something that was very close to my heart. The other is, so my wife, like I told you, she's a doctor, and she's obviously quite passionate about healthcare, and I've been passionate about technology in general, anything that tech can transform or scale or make things efficient. And one of the things close to our heart, both of us grew up in India, Indonesia, and now Singapore, and we're quite humbled by the fact that a lot of the success that we may have enjoyed is simply due to access to equitable opportunity, access to good education, good healthcare. It's practically saying the life just ensured that the dice rolled on the right side. If you were born in a family or in an environment where we didn't have access to opportunity, things would definitely have turned out very differently. So I think we're quite passionate about education and healthcare because we believe that, if one has access to equitable education and healthcare, primary healthcare, longevity changes, your outlook changes, the way you look at opportunities changes. So something that's been close to our heart is how do we ensure that these two economic blocks, people in these economic blocks, especially people below the poverty line or at the middle class, how do they get access to opportunities in education, healthcare? So that's the other reason. And again, mind you, this is not about a charitable act. This is absolutely commercial. At the same time, we genuinely believe that if we fund some of these opportunities, technology is the biggest lever that can potentially change the way people access primary healthcare, or change the way people access emergency medicine, or change the way people access vocational education, which could make a huge difference in life. So we genuinely believe that these don't have to be charities. These can be social enterprises, or these can be scalable ventures which do good at the same time, help people make money. So the economic blocks of Southeast Asia and South Asia, where it's a massive, like you said, 2 billion people plus, and the whole desire to kind of fund opportunities which provide access to good education, healthcare, I think is the other side of the story.
Yeah, awesome, mate. Really powerful. Love to see your passion in how you can make a difference in those areas too. And early stage venture investing obviously has risks, right? So do you want to maybe share what lessons you learned from it so that, when we can do our due diligence, as people that are listening, I guess, and wanting to do investing to make a difference and in businesses as well as grow their wealth. What should we look into, I guess, when we're looking into investments?
Yeah, that's a great one. So, I think fundamentally to start with you yourself and being honest to yourself as to why do you want to do it, right? If it's about only making money, I think the answer, I wouldn't recommend angel investing or venture investing, because you can make lots of money on crypto, on the public markets, etc. So I think the why has to be very clear. So for me, the why, like I said, was yes, the commercials are important, but I also wanted to associate and be actively involved with the startup ecosystem, because I have benefited from it, and I genuinely believe that if you're part of this and if you're part of this movement, it creates jobs, it creates access, and of course it can give you outsized returns. The next question would be which domains, because there are so many domains. So you've got to probably pick 3 or 4 domains that are close to your heart. And I would say domains and markets. For me, it's South Asia, Southeast Asia, but the domains are fintech, insurtech, health tech, education, or B2B, SaaS. These are 4 or 5 domains that I'm quite, I at least would like to believe, or I think I know a little about, right? That's the second part of it. The third is figuring out how much capital are you willing to risk or park for this, because you're right, it is risky, which means you have to be mentally prepared that this money, either the returns will come back much later or may never come back at all, right? So you've got to be comfortable sort of keeping this aside from your, from your larger capital pool. And once you do that, I think what's critical is once you figure the geographical markets of interest, the industries, and the capital. So let's assume you have $100. I think you've also got to use that $100 to build a portfolio, because the odds are against, right? So I would say that if someone's looking at this, you may want to look at having a, it doesn't make sense, no matter how great a startup is, you don't want to risk all your $100 into one or two companies. You probably want to create a portfolio of 10 to 15 companies, because again, no matter how good the founder is, how good the story is, there are too many reasons why a company could fail. So I would say, look at building a portfolio in, across 10 or 15 companies. And a few lessons that I've learned along the way is that I think, once you need to figure out where you're going to access these deals from, right? Of course, it could be from your friends and family. You can network, you can work with some accelerators, you can go to universities, or you could also have conversations with VCs who look at 1,000+ deals every year and say, hey, look, if there's an interesting co-investment opportunity, let me know. So I've been fortunate that some VCs have been very kind, said, hey, look, we are putting in money in this company, it's early stage, but we have X dollars left. Would you want to kind of partake in that opportunity? And that's been a game changer, because when a VC negotiates a contract, the terms are very investor friendly. And that was a great learning experience for me, because when I was doing early stage investments myself, typically you invest through a structure called safe notes, which is basically a debt instrument which converts to equity eventually. But the terms may not be very investor friendly. But when you co-invest with an institutional investor, there the terms are very investor friendly in terms of they take a look at protecting your downside. Like, they would ensure that, when the sale happens, the VCs get their money out first, because they are an institution. They have some fiduciary duty. They also have potentially information rights, which an individual investor may not have. They may have a board seat, so they may have a bit of say in shaping the company's destiny. So I would definitely urge that when you're building a portfolio, some deals you may want to co-invest within, venture capitalists or private equity investors, if you know people there. The rest of it, of course, could be individual, which are done through safe notes. And what I would definitely urge is, if you're doing this and if you have time, to carve out, try and strike deals where it's not just about the monetary investment, but it's also about having some advisory options, so that you kind of work with the founders, have an option to kind of be a sounding board and help them out. The other ways that you can de-risk also is, of course, what I always look at is, 3 or 4 factors is the market size of the opportunity, right? So how large is the opportunity? How competitive it is. So if it's $100 billion opportunity, you want to look at what's addressable. Maybe if it's very competitive, doesn't matter how big it is, maybe it's a red ocean. Maybe the competition is too large. But maybe if it could be a $1 billion opportunity, but maybe it's a blue ocean. So that's exciting. You also want to look at the co-founding team, right? Are they the right co-founders for this problem set? So before product market fit, I also look at founder problem fit. And these guys could be a great bunch of founders or co-founders, but are they the right fit for this opportunity or this industry? Do they have a personal connect with the opportunity? Because things will go wrong, but you want to look out for resilience. That if someone has a personal story as to why they're trying to solve a problem in this industry, chances are they'll stick it through a recession or through a down round, right? You want to look out for those elements of how passionate are they about an industry or a problem? How have they dealt with failures in the past? You also want to look at the chemistry of the co-founders. Are they aligned on values, but are they do they have complementary skill sets to help each other? And these are subjective, hard to assess. It's not a 1 or 0, but it's an appetite. It's something you figure out over time when you spend some time with these co-founders. And of course, the last thing I look at is, I've never invested in a pre-revenue startup. I like to look at some revenue, some product market fit. And ideally, I would rather invest in a company which has only 2 customers, but recurring revenue, rather than someone who has 10 customers, but customers who have only struck or who have come back to them only once. So I want to see some stickiness, right? So to sum it up, the quality of the co-founders, their equation, the problem size, the blue ocean versus red ocean, the investment terms, can you get some advisory or information rights? So it's an art and a science, but I would definitely say that, these are a few ways of de-risking your investment in what is already a risky environment. And hence also definitely try and build a portfolio. Look at, 50 deals, pick 5 or 10 that kind of, feel the best bet to build a portfolio after screening many deals. Don't just jump into every deal that comes your way. So give yourself time. If you've kept that $100 aside, keep it aside for 10 investments and look at least, I would say, look at least 50 odd companies before picking 10. Because again, there's a lot of opportunities there. Entrepreneurship is booming. You shouldn't kind of fall into a trap of FOMO and invest just because everyone else is doing this.
Yeah, love it, mate. Really powerful points there. Thank you for sharing and how we can really look at opportunities in a different way and leverage that risk as well. So now I know that fundraisers can be a really powerful way as well to create some positive social impact and how we can grow and improve access to certain things in these different industries that you're talking about. So you want to maybe talk a little bit about how we can leverage fundraisers to really make a bigger impact?
Yeah, so there are 2 kinds of fundraisers that I've done, right? So one is for these for-profit companies, whether through roadshows or whether through crowdfunding or whether through syndicates, right? Where sometimes I would work with, let's say, 10 friends, and let's say a company is looking to raise 500K, I would create a special purpose vehicle where maybe 10 or 20 friends come in and pool in cash, and that kind of turns into an investment. On the other side, during COVID, we've done crowdfunding fundraiser campaigns for charitable organizations, especially in emerging markets where the impact of COVID was rather severe. So one of the fundraisers that was very close to my heart, we did 2 rounds, one in April 2020, where my wife and I used a crowdfunding platform in India called Milab. And we basically did just to incentivize and get the ball rolling, we said, we're raising funds for migrant workers who are stuck, who had to, because the country went into a lockdown, they had to move from cities back to their villages, and it was a horrid time. So we said, for every dollar that people contribute, we'll top it up. So that created a nice 1:1 matching layer. A year later, we did that again, because again, the country went into a lockdown. We did this for India and Indonesia, 2 countries where we have grown up. And this 1:1 matching worked wonders, because collectively we were able to, in each round, the first round we raised about 150, second round we raised about $250,000. But the magic was this created a wave of ripples, where the body I mentioned earlier, Thai, which is a body of entrepreneurs, they were very inspired with what we were doing, and our fundraiser got a lot of media attention in Singapore. And they said, wow, if 2 individuals can do this, perhaps as a network we can do larger. So, and I happened to be on the board. I said, absolutely, let me drive this, but let's collectively do this. So what happened, within a span of 9 days, we took that individual $250,000 fundraiser, we took the same concept, but now Thai being a global network, we went to one of the largest VCs in the US, who's one of the founding members of Thai, Vinod Khosla from Khosla Ventures. He's funded, he's one of the early co-founders of Sun Microsystems. He's funded various ventures around the world, including Impossible Foods, being one of the very famous ones. And he basically said, look, I have $1 million check. Only if you can raise $1 million, you have $1 million from my side. So in a span of 9 days, what we did is we went to some well-known cricketers and Bollywood stars in India through our network. And we said, guys, we'll do a virtual fundraiser event. It's COVID, we can't do a physical fundraiser. So we did a virtual event, which had a link for people to watch the show and donate. And through that, we managed to raise about $3 million within 2 days. And then apart from that, we had the $1 million check from Mr. Vinod Khosla. So collectively, I think at the end, we had about million. So again, this just shows the collective power of people, the collective power of technology, if there is political will, if there is desire to bring about change. And of course, COVID was a great lesson that if we really wanted to make an impact, someone has to start, someone has to be the catalyst. And that's where, in hindsight, me and my wife, we feel quite happy and privileged and proud that, we could start a movement which was just about a 200K friends and family sort of round, but eventually that ballooned and spiraled into something much larger, where people could participate. So that's on the philanthropic side, but the same model of the collective power of people and using technology to kind of rally and catalyze a movement. We have used that for fundraising for early stage startups as well.
Yeah, love it, mate. Really powerful and love to hear, different ways how you've made that difference. They're really powerful, and it's been so much gold on this show today. I'm sure everyone will agree. And as we're wrapping up, do you want to maybe share one key piece of advice that you would give to all the entrepreneurs watching and listening today?
Absolutely. Something that I've always believed is as an entrepreneur, you've got to believe yourself. You've got to back yourself. You've got, conviction and point of view is probably the biggest strength an entrepreneur can have for himself or herself. Because again, going back to my earlier point, there's only that much that you can control yourself. The world, there are too many variables not in your control. So if you have your own point of view and your own conviction, there's only one life, and you've got to back yourself. There will be ups and downs, but if you have a strong conviction, if you back yourself, and if you focus on the variables that are in your control every day, that's the best you can do. So my only piece of advice is listen to people, get diverse opinions, but make your choices based on what you think is right or wrong, based on your conviction. And you'll be wrong probably on most occasions, but there is nothing like a strong conviction and point of view, because if you don't trust and back yourself, you can't expect others to. So that's my humble suggestion and request to all entrepreneurs, that irrespective of good or bad times, just hone your point of view and your conviction. That's your biggest asset.
Yeah, love that. So true, so true. And yeah, we connected through our networks, where I learned about your awesome journey from starting your entrepreneurial journey with HappyMarketer in 2011, where you spent a decade building and scaling up to be one of the most awarded independent digital marketing service firms in the region. Then you recently, in February 2019, where you had a successful exit, where you sold to Dentsu International there as well. So really powerful stuff there, and everything with the investing and everything else that you're getting up to, where you're helping a lot of founders, which is really, really powerful. You're an awesome guy, and I'm sure you continue to make a big difference in this world. I'm very grateful that we connected, and I look forward to working with you in the future. So Prantik, how can people find you and get in contact with you?
The easiest way is via LinkedIn. So just search for my name, Prantik Mazumdar, on LinkedIn. I don't think there are too many people with that name. Look me up, or just add Singapore at the end. You'll find me. Just drop me a personal message, or follow me, or add me as a connection. And if any one of you listening is in Singapore, or if I can be of help in Singapore or in Southeast Asia or India, always more than happy. And Athin, I just want to say thank you for doing this, and thank you for hosting the show, because I've heard some of these episodes, and it's these stories that can make a person's day. And sometimes all you need is that spark. Just listening to someone else's story, the ups and downs, and it could make your day, and you never know, it can change the course of someone's life. So thank you for doing this.
You're welcome, mate. Thank you so much. And definitely connect with Prantik. He's an amazing guy. I'm sure everyone will agree. And thank you to everyone for watching and listening to this show, where we talk about everything on business growth. Please like, subscribe, and leave us a 5-star review. You can find me on Facebook, LinkedIn, Instagram, and YouTube as Athin Cassiotis, or visit my website, athincassiotis.com. I completely agree with you, or do I? The only way you'll know is if you tune in next time. So until next time, remember that our business grows when we learn skills and take action using them in spite of fear. So remember to design your growth and results.